Well, all right. Yes. What's going on, family? What is up? What is going on? Welcome back to another session, another stream with your boy Abel. Super excited to be here with every single one of you guys that's with me tonight. Go ahead and drop those locations, family. Drop those locations in the Chizzy chat, because we're gonna have another phenomenal session as usual. And hopefully I'm able to provide you guys with a little bit of value, a little bit of insight, a little bit of sauce, and give you something that, brings some clarity in your trading journey overall. Right, but let's see, we got Phoenix in the building. What is going on, family? We got Phoenix. I see we got the boot in the house. Right, let's see what else we got here. We got Tony in the building. What's going on, Tony? Kyle, I see you. Salson, what's up? Z, what's going on? We got Chicago in the house. Augusta, Georgia. All right, we got Chicago in the building. What's going on, family? Chicago is deep in the house tonight. What's going on, guys? How are you guys doing? Right, we got B More in the building. We got the Ivory Coast in the house. What is going on? We ready. Got my note pen and my willing and able attitude. Let's go, Julian. I'd love to see it, baby. All right, we got Sydney, Australia in the house with us tonight. Right, New Mexico's in the building. Colombo, Sri Lanka is in the house as well. Super excited to be here with every single one of you guys tonight. And we do got a lot to talk about tonight, family, because we had a lot of important news events, a lot of data that actually came out earlier today that has definitely brought a lot of volatility to the markets overall. So let's go ahead and just take a quick look at that. Right now, the first thing we got to keep our eyes on, guys, is pretty much understanding exactly what we're going through right now. This article right here, guys, that actually came out. It came out pretty much earlier in the day. It pretty much tells exactly what's on the minds of most people right here, right? This article says U.S. falls into a technical recession after second straight quarterly contraction, right? This has been the talk of the town for pretty much, since last actual, reading, right, in terms of GDP, because everybody's been talking about, the technical definition of a recession, with it being, 2 quarters contracting consecutively, right? But now that it's actually here, and now that we actually did get the actual release, guys, and GDP actually did come out, at negative 0.9%, right? So it was the second straight quarter where we actually experienced contraction in our economy. Right now, what is happening next, right? That's the big question. I'm pretty sure a lot of you guys are probably wondering, like, Abel, now we see the report, now we see the data, but what can we do now to position ourselves? All right, well, understand what that report really is, guys, right? And understand what that report really is going to do. Obviously right now, another big talking point that we've been seeing all throughout the day is the fact that the Federal Reserve and the government is trying to pretty much redefine their definition of a recession. Okay, so that's definitely been a very big, strong talking point as well. But overall, anytime there's talks about a recession, guys, that's not positive news. That's not positive data. All right, that is not something to take lightly, right? Because investors and traders across the world, they're making decisions based on this type of data, right? They're debating on whether they want to go ahead and invest heavy or invest period based on the state of the economy, the state of what these central banks and a lot of these governments are actually trying to do and act on. So this is definitely going to play a big role, guys, in my opinion, on what actually does happen moving forward in the markets. But I actually want to go ahead and just read. I'm not going to read the entire thing, right? But I want to go ahead and just read bits and pieces, guys, of this article, because it does have a lot of great talking points in this article that can give us a much stronger position, at least going into next week, family, when the market does open back up. Again, we do have technically tomorrow to trade with, but I want to start preparing myself for what I can look for going into next week. All right, so let's see what we got here. Right, so U.S. growth contracted in the second quarter, according to the Bureau of Economic Analysis on Thursday, as the world's largest economy failed to avoid slumping into a so-called technical recession. The preliminary GDP in the country fell by 0.9% on an annualized basis during the period, marking the second straight quarterly decline after the reading dropped by 1.6% in the first 3 months of the year. 2 consecutive quarters of negative figures can be defined as a technical recession. That's exactly what we've been talking about, right? But listen here. It says, however, the U.S. does not adhere to that definition, instead following a determination from the National Bureau of Economic Research that is based on several different factors, such as the labor market and underlying demand. Right, so this is pretty much what I was just talking to you about, how now the U.S. out of nowhere is pretty much trying to redefine the word recession, right, and how they want to interpret it and how they want us to actually look at it. Now, there's a lot of different thoughts and theories and opinions on why they're probably doing this, right? I mean, times could be a little bit different now where a recession, is obviously more, it's happening, right? Like, again, we're literally in a recession right now from a technical perspective. But because maybe things have changed, because we still have a lot of underlying demand for various industries in our economy, in their opinion, they think that is going to pretty much, allow us to pretty much manage this recession much more easier than previous recessions, right? So, again, very important talking piece that everybody's been talking about is them pretty much saying that they're redefining the definition. Now, if we really look at these markets, guys, right, we take a look at, say, the indices, right, like S&P, US 30, NAS 100, right? If we actually take a look at these assets, right, we can see that today, based off the news, we actually seen the market pretty much rebound, right, and actually gain strength to literally finish out today, right, where we had a lot of bullish momentum that actually really came in. I mean, literally since the start of New York session, right, this thing has been absolutely going higher. Now, why would that happen, right? Why would that occur, especially when we just had pretty much confirmation of a quote-unquote technical recession? Right now, the first thing that we have to really just keep in mind is that this talk about recession has been happening for a while now, right? Again, since the end of the first quarter, which was February, March, and we actually came out negative GDP. It was already expected, right? Like, the talks were all there, the rumors were there that Q2 was probably going to come out negative as well, and that was going to solidify a recession, right? So, in my opinion, I believe that the reason why we didn't get such a crazy negative reaction, and I still think we are going to, I could be completely wrong, right? But I do believe we are eventually going to roll around and go back into that bearish trend that we've been experiencing for the indices. But I do believe that based on, the actual press conference, from Jerome Powell, based on how they're pretty much now trying to rearrange terminology, right? And again, they're still being very passive on their approach right now, right? Their biggest thing has been to try to fight inflation, which is why we've been seeing consistent interest rate hikes occurring every single meeting so far. But another reason why I think this could also be bouncing up is, specific wording on what he said during his press conference, right? Jerome Powell, I'm speaking about, because Jerome Powell actually mentioned that they have no issue whatsoever, right? No issue whatsoever. Actually, pretty much going back to what we were, right? Doing a U-turn with what they're doing right now. Right now, they're being aggressive. They're raising rates. They're tightening across the board. They're not printing as much money, and they're not purchasing as much debt as they normally are. Right? That's considered tightening, right? They're tightening across the board. But they also said, Jerome literally said that to expect in the future, the real close future, to expect everything to turn back around. AKA probably start lowering rates again, probably start turning on the printer, the money printer that the Fed has, right, and actually goes through the process of easing now, which is going to again encourage people to start spending once again, and that's going to pretty much going to get us back into the cycle that we're pretty much experiencing now with how high inflation truly is. All right, so there's a lot going on. All right, there's a lot going on. On top of that, all right, I actually see what you're talking about, Christian, right? I was actually going to bring that up next, right? Because that was another article too, right? On top of that, another reason why we could have also seen the indice markets gain strength today was also because of earnings, right? We have had, guys, major corporations this week literally get their earnings reports, right? To show if they're doing good or if they're doing bad, right? If they're either contracting or if they're expanding as a company, and today we had some major ones. The biggest well-known is Apple, right? Apple actually came out and beat projections. Amazon came out lower. They did not actually reach projections, so they actually ended up contracting a little bit. But Apple beat projections. MasterCard beat projections. Pfizer beat projections, right? So we have big-time corporations here that are also, for the most part, look at these beats, right? Like, it's mostly green that you're seeing here. That a lot of these big time companies are absolutely beating projections on earnings. So this can also definitely play a role, right? Because whenever investors and traders start to see overall growth occurring, especially from earnings season, yeah, you're normally going to see a nice little pop in the markets because of that. So again, that's just another reason why, probably one of the few reasons why, we've been experiencing, at least, for today, this little uptick in the markets as a whole. But if you guys also keep in mind, family, when I was looking at this yesterday, right, what did I tell you guys, right? I told you guys I wanted to see price come up to this area anyways, right? This area of supply. So now that we are coming up into this area of supply, I'm going to be looking to see if there is going to be an opportunity to potentially go ahead and ride this thing back down. Because even though we have experienced, guys, some bullish momentum, in my opinion, I could be wrong, but in my opinion, I think personally that it's eventually going to go ahead and turn around, and we're going to continue in this bearish tone, this bearish trend that we've pretty much been experiencing here for the indices right now. That's going to be my bias until proven otherwise. And when I say proven otherwise, I mean very simple. If we see a massive, strong shakeup, right, then at that point, I'll probably just be sitting on my hands and just allowing the market to do what it does, right? And I'll figure something else. But overall, I'm still very much bearish. All right, so I do like the opportunity to see how the market does react around these highs that we're pretty much at. And it's going to be very similar to a lot of these indices, right? Same thing with US 30, coming up into this area of supply where we really could see the market give us a nice reaction from, all right from this supply zone right up here. All right, so again, that's something else that we could potentially look at and keep our eyes on going into tomorrow morning, and then eventually going into next week as well. All right, and again, NAS 100 is similar. NAS 100 definitely did gain a lot of strength overall, and NAS pretty much gained a lot of strength overall, just because, again, a lot of these big time corporations that were actually receiving their earnings and were actually beating projections, they were mostly technology companies. Right, the NAS 100 is made up of mainly tech, right, tech companies. So if we have pretty much across the board, we're experiencing a lot of tech companies beating projections, and that's gonna cause the NAS 100 to absolutely spike up as well, right? So that's gonna be interesting to see what happens with this, though. Are we actually gonna be able to hold this level right here of structure, or are we gonna continue to go higher? If we do continue to go higher, then at that point, I'm probably gonna expect NAS to come up to around the 13. I would say the 13,150 level, and then from there, again, I'm still ultimately bearish, right? So then from there, we can go ahead and possibly experience something like that, right? So, that's just my opinion, guys, on the indice market and what I think can actually happen, especially based on what we've been experiencing, based on how the market has been reacting to various data. That's what I think overall. I would like to see, these indices pretty much do. All right, so let's see what else we got here. Lost on Ohio. What's going on? Shout out to you guys out there in Ohio. We got New Jersey in the building. What is up? Let's see. They want to redefine the word recession. Yup. What's happening? What's going on, TJ? Good to see you in the chats. If you can look at GU, yeah, I got you guys. I look at GU. I look at gold. I got you guys. And positive earnings for stocks cost 100% again. All right, let's see. Hey, but what makes these negative results different to the COVID ones? What do you mean by negative results? What specific news event are you referring to? How do I get added into the inner circle? I don't want to DM a fake IG. That's a great question, right? So if you do have a membership, which I see you do, O'Neal, my Instagram is right below my face right here. Like literally, my real Instagram is directly below my face, directly below this little box that I'm hiding in right now. Right, so just make sure you go to that one, right? Make sure you're following that correct one. All right, it's Abel Melendez, all one word pretty much. It's Abel Melendez, no underscores, no nothing, right? Just make sure you spell my name correctly. That's all. Let's see, what makes these negative results different to the COVID? So the GDP, That's a great question, right? So again, the whole COVID thing, the whole, especially because there was like a short term, back literally when COVID pretty much was going crazy around 2018, 2019. There was a period where we did have 2 consecutive quarters, right? And where there was, the a scare of a recession, right? Because the 10 and 2, bond yield curve was actually happening, right? And all there was mad talks of it. But a big difference with that and why GDP back then was a little different than right now is because as soon as we seen that occur and we seen COVID go crazy, they started printing money left and right. Like they were literally printing money, 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 stimulus package here, stimulus package there, right? So the GDP going down to the downside and actually starting to contract during COVID era was literally just because most people couldn't do nothing, right? Everybody was trapped in the house. Everybody was literally sitting at home. So there wasn't as much spending occurring regardless because everybody was trapped. Nobody could leave. But also, that GDP was also taken care of based on how much money was printed and how easy it was to get access to money. That's what pretty much got us right out of the quote-unquote recession. Pretty much very, very quickly, right? But this time it's a little different, right? GDP now is negative simply because we are starting to see interest rates go up, right? Interest rates have been going up, which has been causing, less spending. And that's the whole point of them raising interest rates, was to try to promote less spending to occur across the board. And that's the reason why we are starting to see GDP contract, is because now interest rates have gone up to where now people just want to sit on cash and they don't want to spend it on unnecessary things anymore. All right, so those are just a couple little differences in terms of GDP and how we could pretty much play those. All right, so this is what we're looking at, guys, for these indices. Like I said, it's very interesting to see overall what the market has been doing. All right, so let's go ahead and continue reading this, though, because I want you guys to really at least get the gist of what is really happening behind the scenes here, okay? So let's look at this right here, guys, where this quote is. The decrease in real GDP reflected decreases in private inventory investment, residential fixed investment, federal government spending, state and local government spending, and non-residential fixed investments that were partly offset by increases in exports and personal consumption expenditures. Yeah, blah, blah, blah. All right, let's see. The numbers come out. Yeah, power strong focus on inflation mandate, therefore supports our forecast that the economy will in fact go into recession in the second half of this year. There is still a path to a soft landing, but it is too narrow to be our case. Yep. Let's see. Even still, the central bank does not look poised to change its stance anytime soon. Federal Chairman Jerome Powell said on Wednesday he does not believe the U.S. is currently in a recession, citing in part recent tightness in the labor market. See, they're literally just pretty much depending on the labor market, all right, to keep us out of a recession. Which, guys, we've been in a recession now for 28 days. Okay, at the start of this month, the start of quarter 3, we have been in a recession. I don't care what Jerome Powell says. I don't care what anybody says. Right? We have been in a recession, and now we have to just deal with it. Right? We have to prepare with it. Again, the big reason why they're still trying to pretty much downplay is because we do have such a strong jobs market. Right? Unemployment is still at 3.6%. Right? It's extremely low. There's still a lot of jobs available. All right? A lot of jobs out there, and people could easily go get some jobs. And that's what they're pretty much depending on. But one thing about the job market as well is if you're going to use the job market as an indicator, the job market is very laggy as an indicator. Like, it's super laggy, right? So we see things like, signs like like inflation occur. Like, let's say we're starting to read signs and we are starting to see signs that inflation is going crazy, okay? And then we start to see the Fed react off of this inflation because it's going crazy. The jobs market isn't going to react that quickly, right? It's delayed. It's delayed, baby, by 3 to 6 months. So, yeah, right now the job market is still strong. But give it another 3 to 6 months and see where the job market is at. Right? Another 3 to 6 months, we're going to have massive layoffs occurring across the entire world. And then, once they start to see that from the data, then they're going to want to try to, again, come back to it and try to act, right? So right now, again, they're still playing and downplaying this tremendously, guys, because they're really just depending on the jobs market. But understanding the jobs market and just understanding how to read that from an indicator perspective is going to be delayed. It's going to be delayed. All right, so yeah, we're still at 3.6% now, but in the next 3 to 6 months, unemployment rate is going to go up to 4%, 5%, 6%, maybe even 10% the way it's going. So just don't be fooled, family. Don't be fooled by, all this nonsense that is going to be said out there. Especially since, right, and it's just something to keep in mind, guys, right? We do have midterm elections coming up. Okay, we do have midterm elections coming up. So you best believe that there is a lot of influencing happening in the background, especially to a lot of these media outlets, to try to sway their audience towards a certain direction. All right, again, a lot of these media stations, guys, almost every single one, they have their own agendas they have to push. So think about it. Another reason why they're probably still trying to downplay inflation or downplay the recession, is probably because the midterm elections is coming up. You don't want to go into midterm elections when all you see on the news is headlines about recession this, recession that. All right, that's not a good look, right? They're gonna have to try to change the narrative. All right, at least until after midterms. All right, so it's things like this, guys, that as crazy as it sounds, like things like that influence these markets. Right, because a lot of these high political figures that are pretty much running our countries, they also have an agenda that they want to push, so they're also influencing exactly what the hell's going on. So we just need to be prepared for this, though. We just need to be prepared, though. That's the biggest thing. As long as we come prepared, then we're going to be good to go. Right, but again, this is a very interesting article, just talking about pretty much what we experienced today and what's really going on. Right, but let's go take a look at the markets now, guys, and see what really is happening. So we have gold here, and gold itself is literally, it's definitely going higher and higher. Now, if you guys remember from yesterday, I told you guys I was expecting this, right? Like I told you guys I was expecting this, right? I told you guys that I expect the price to come up higher, give us a correction, probably run this high right here, up into this area of supply, and then from there, I wanted to look for more continuations lower. All right, so again, gold is doing exactly the way that I expected it. Again, I didn't take no trades on gold today, though, being honest, fully transparent. All right, I didn't take no trades on gold, but I know I did say that we could see bullish momentum. But now, what can we expect for gold, guys, going into tonight and into tomorrow morning? Right, well, I'm very interested to see how gold actually acts around this level of structure that we have here, right around the 1770 level, right up in this area of supply. I really am interested in looking for some shorts up there. Okay, so if gold is able to make its way up here, I really like the 1760. I'll say 1765 level. Yeah, 1765 is really a nice juicy area for me to go ahead and look for some shorting opportunities from. Okay, so 1765, if we're able to get up there, I'm going to go ahead and take that trade and then target back down to around 1723s, 1715s, 1700s, and then possibly even down to 1680s. Right, but overall it doesn't look bad, right? It looks like a pretty juicy opportunity here. If we're able to go ahead and spike up into this area of supply at around 1765, then I like the continuation lower. Again, staying with the path of least resistance. We have continuously been flowing to the downside, and I still believe there's a good chance for that to continue to occur overall. All right, so that 1765 is pretty much where I will be looking for a potential entry from 1765 or so. All right, 1760s. Okay, so yeah, that's gold, guys. Right, not a bad outlook, not a bad looking setup. We just got to see what price actually ends up doing. All right, then we got to deal with it. All right, so let's see what else we got here. Let's go ahead and take a look at a few of these other pairs that we have. I know a lot of you guys were calling out different pairs, right? But let's go ahead and take a look at it. All right, so again, Euro USD, all right, it's still pretty much setting up. I think that we still have more upside here for the euro. Right, I would love to see again price really come into this gap right here, right, this little area of imbalance. I really want to see price really get into that area, okay, because then once we actually get into that area, then we'll be able to go ahead and see how price reacts around there. But what I want to see, guys, is I literally want to see price go ahead and spike up in this level, come right back down in the range, and then go ahead and continue in this bearish trend, right? So that's literally what I want to see for Euro USD. All right, let me go ahead and draw it one more time, right? I do want to see this thing actually go ahead and break up into this level, all right? Probably come test right up in this entire range right here. And then from there, I'm going to be expecting price to come back down below that level and then go ahead and send us bearish, right? Because I'm still very much bearish this, right? Very much bearish. Like, we didn't even really do nothing today, guys. Literally, we just went pretty much sideways this entire week. All right, literally this entire week for euro and for the dollar, we did not do a damn thing. We just been going sideways, just been accumulating orders, and eventually we're gonna see that breakout. All right, and I want to see the breakout to the upside, get us up into this area here, and then from there we look for shorts to go ahead and ride it back down all the way to the lows. All right, so I'm still very much bearish long term. I just want to see. I think that we could see more momentum to the upside for now. Right, so that's my analysis on the euro, right, on Euro USD. I mean, in my opinion, it looks pretty juicy. Looks pretty juicy. All right, looks pretty juicy. All right, seeing price come all the way back up to this level up here would be pretty nice. Just lining it up with structure. All right, so yeah, you know, that's pretty much what I'll be looking for. So we'll see what happens. Like I said, if we do spike up, I'll be ready to go ahead and look for an opportunity to jump in. Okay, so yeah, that one looks pretty good. Okay, let's go take a look at GU. GU is pretty much still in the same exact area that we talked about yesterday, right? Really didn't move much, like, at all. All right, so overall we're still here, guys, for GU. All right, looking for this opportunity to go ahead and take this setup. Again, very similar. I want to see this thing spike up around that 1.226 level. And then from that 1.226, I want to go ahead and continue in this bearish trend, right? Because, again, the path of least resistance has been bearish. Right? So we want to continue to look for that long term. It's just now we're in the middle of this correction, and that's fine. We just got to find the next opportunity to go ahead and get involved with this short. And I like this area right here, 1.225. 1.225, right? That level looks extremely sexy, extremely attractive, and that's definitely going to be an opportunity, guys, I'm going to be looking at going into tonight to see if we can go ahead and get a nice entry off of that. All right, so that's going to be my bias here for GBPUSD. All right, let's go take a look at AU, and literally all of these are pretty much going to be very similar, by the way, right? Euro USD, AUD USD, GBP USD, like, they're all going to be very similar because of the correlation that they have against the dollar itself, right? Or at least because they're being traded against the dollar. So it's pretty much going to be very similar, right? So even for AU, guys, right, I want to see price come up into this area up here, right around the 0.705 level, and then from there we go ahead and hopefully see this thing reverse. All right, like, that's literally, I mean, again, it's not no different than the other ones. If I'm expecting dollar strength to eventually be the most dominant thing, then yeah, eventually we're going to see all of these assets continue to tumble to the downside, just like they pretty much been doing, right? We've been seeing bearishness come in for a lot of these different assets, so it's just a matter of just waiting for the next opportunity to get in now. So for AU, yeah, I really like this 0.705 level, 0.705. You know, if we're able to get up into there, I like the shorting opportunity for AU. Just continuing this bearish tone that we've been seeing. All right, so that doesn't look too bad neither, guys, for AU. You know, an opportunity right up here might be beneficial. All right, so let's see what we got here, guys. So again, we did have an opportunity for CAD last night, USD CAD. I told you guys that I wanted to see it probably come up into here, and it pretty much did exactly what I wanted it to, literally. right? And I still think that we have more downside, guys, for USD CAD. Okay, I do think we still have more downside here for USD CAD to go. So if I'm looking at USD CAD, I'm going to be looking for more continuations to the sell side. Now, how can I do that? Well, let's go ahead and take a look at what we're looking at right now for CAD. All right, so if we're able to go ahead and look for some shorting opportunities, where would it be at? I mean, right here might be a good little attempt. Like right back here, we're on the 1 hour time frame, right? But right around here, around the 1.283 level, might not be a bad opportunity. Okay, that might be an opportunity that at least gets you a nice, a nice little trade right off of it, right? So that 1.283 level, 1.283, is not a bad play. And just look at how price reacted too, right? We had strong push down. I really love playing these type of plays, right? We had this little, you could say, level of resistance, structure, right shoulder, left shoulder, whatever you want to call it. Then we had this big spike up. Now we can see possibly price come up, create that right shoulder. And then that right shoulder can lead to a continuation lower for USD CAD. Right, again, keep in mind, guys, like I think we can realistically see USD CAD come all the way down to the 1.26 levels, right? So that's 150, 200 pips away. It's just a matter of finding the entries. That simple. All right, find the entries that are going to align with the bigger picture, with your overall bias, and then just ride that bad boy out. So it's either we're going to short from right here, or price could also come up to the higher level, and then we can also short from right there as well, right? So just play either or of these levels, but I do like the potential for this to continue bearish, at least for right now, short term. I expected more bearishness to come in, right? So that's not a bad opportunity though, guys. Again, like this one is really not that bad, like at all. All right, like this short opportunity here for UCAD, stay woke. That might be a good one. That might be a good one. All right, let's go take a look at UJ. All right, so UJ as well is pretty much doing exactly what I wanted it to. This is an area, guys, like a level that I created with you guys yesterday on yesterday's stream. And I said I wanted to eventually see price pretty much come back down to here. And down here is where I'll be comfortable looking for some buying opportunity once again here for USD/JPY. And I still like that. I still do like that a lot. I do like the potential for price to come down to these levels and then eventually give us a nice opportunity to go ahead and ride us right back up to at least these, levels of structures that we have here. But I do like it. I still like the upside. I still like the potential for this thing to turn around at this level. It's just I'm going to be very patient when we do get to this level, though. All right, because there is a chance for price to go ahead and really turn around from these levels. But I really want to depend on price action for this specific example right here. So I want to wait for evidence of the market actually starting to reverse with something like this, right? Maybe a nice pushback down to this level. We start to create some structure. We go ahead and run lower and then completely erase that move. Yeah, that's really what I want to see, right? Let me draw it again for you guys. I would love to see price come down into here, start to create structure. Go ahead and do something like this, a nice strong shift right out of there, and then from there we could look for some opportunities to go higher. Right, so again, I'm gonna be very patient with UJ, to see exactly if we're able to get a decent entry. But that's what I think, right? I still think we have a little bit more downside here, guys, for UJ. So a move back up can possibly trigger a move right down into here. So overall, not a bad play neither. All right, let's see what we got here in the chats. Guys, hit the likes for him. Yeah, definitely, family. I appreciate you guys so much for just even supporting me and being on these streams. But if you could do me one solid by going ahead and smashing that like button, it would definitely mean a lot to me for sure. All right, let's see, bro. Keep doing these lives, please. That's the goal, right? My intentions is to continue to do these, live streams for you guys every single Tuesday, Wednesday, and Thursday consistently. Until further notice. All right, we're gonna be doing this at least for the rest of this year. Right, for the rest of this year, I'm going to be doing these, right, just for y'all. So we definitely going to do it, for sure. All right, so let's see. He doesn't, yep, exactly. EURUJPY, what do you think? Right, let's go take a look at EURUJPY now that we got through a lot of those and see what we got going on over here. All right, so EURUJPY, right, again, very similar to what I believe GJ looks like. We obviously did see a very bearish day, and that happened pretty much across the board. The yen, was probably one of the strongest currencies yesterday, or at least today. All right, and clearly we can see the market reacted because of that, or to that. But what can we expect next now, right? What can we expect next for Euro JPY, right? Well, right now, guys, we are at a very interesting level of structure. All right, a very interesting level of structure, support, and resistance. And the question is, are we going to be able to hold this level and actually bounce back? Or are we actually going to break this level and start trickling a little bit lower? My opinion, okay, I could be wrong, but my opinion, I think we actually do end up continuing to break this level right here of structure that we're currently at. And I think we have a good chance of price really coming down to around this 135 level, right? So right now, I think we could see more bearishness, but around this 134.8, 135 level, I think there's a chance for us to actually go ahead and rebound and start to see higher prices here for Euro JPY. All right, but for now, it does seem like we're probably going to just continue rolling over going into tonight and then into tomorrow morning. All right, so that's just my opinion for Euro JPY. Let's go to lower time frame, see if there's anything that we could take a look at. So from the 15-minute perspective, we are reacting off of a pretty nice, a little decent area of supply. So we're now starting to see this thing roll over. Would I look for an opportunity to jump in from anything that I'm looking at here for Euro JPY? I mean, I like the, like I said, I like the sell side. So maybe, right? Maybe if this level actually decides to hold, you might be able to catch a nice little entry going lower, right? And the reason for it is because then we are genuinely right now seeing some bearish momentum. What we just seen in terms of price action, we had this high created, right? Higher low, higher high, and now price has come all the way back down below. So this area right here, guys, can act like another level of structure or a right shoulder for all you guys that like inverted or just head and shoulder patterns. And then that can realistically trigger a continuation lower. That is very possible. Like very, very possible for that to actually occur. All right, so if you are interested in Euro JPY, then that's pretty much how I would approach it. You know, I would look to see now to see if this level right here can actually hold. Let me see if I could just highlight it for you guys. All right, because I want y'all to see this. All right, so yeah, maybe this level right here, this yellow level now, on a pull back up, it actually goes ahead, holds, and we can go ahead and ride, you know, this move much slower, right? So, you know, that's just a quick little outlook, guys. A bigger perspective outlook on EJ, but also some short-term opportunity that if I was interested in it, that's what I would be looking to do. Let's see what else we got here. Tuned in from Uganda. What's going on, Patrick? Good to see you. Shout out to you guys out there in Uganda. Who's from Chicago? There's a lot of you guys out there in Chicago. I've definitely got to make a trip to Chicago for sure, right? For an in-person 5-day boot camp. That would be next level. Let's see. We got South Africa in the building. What's going on? Shout out to you guys out there in South Africa. On Euro JPY, I was looking for price to break the lows of 132.600. I mean, it is possible, right? You know, the market's going to do what it wants to do either way. If we do end up breaking like this is going to be a very big, very, very important level that we have here, right? Around this 134 level. All right, because if we do end up breaking below that 134 and make it to that 132, then I'm probably just going to expect more continuations lower at that point. All right, but it is possible. You know, the market's going to do what it wants to do regardless. It's just all about us taking what we identify as data and, you know, just making the best decision that we feel like is best for us. And then dealing with the consequences. All right, so, but yeah. Let's see. Is the news from Yellen and Powell going to be sustainable? The indices rocketed today. All right, again, I don't think it's going to be sustainable. Me personally, I don't think it is. All right, I just don't think people are buying what they're saying. We did just see obviously a nice bump in the indices today for various reasons that we spoke about earlier. But like I said, I don't think it's going to be sustainable. I think it's going to be short-lived. I really don't think these indices, guys, and the overall markets as a whole is going to rebound until they finally start to, for one, see inflation starting to slow down, and for two, they actually start pretty much, you know, printing again, right? They start lowering rates and they start printing, and going through the process of pretty much easing. So until we actually see them start to lower rates, we're probably going to continue to experience, what we've been experiencing, right? Which is weaker indices and stronger dollar as a whole. All right. Right, let's see. That would be crazy. What is your money management strategy? That's a good question, right? I have various different money management techniques, especially when it comes to trading. Just because, again, if you want to live off of this, right? If you want to live off trading, guys, then being able to manage your money is definitely one of the most important things you have to learn how to do, right? There's actually a quote that I say all the time now, right? That somebody had told me, right? And they say that if you cannot manage the money in your bank account, then you cannot manage the money in your trading account. And that is so true, right? Because money management in itself is a skill, all right? You have to develop that skill of learning how to manage your money correctly. So when it comes to trading, right, for me, very simple. I don't risk my entire account, right? When it comes to managing your money, it really comes down to how you're managing it compared or against the risk that you're actually gonna, allow it to be open to. So for me, I obviously know how to manage, or I manage my money in a way to where I don't risk more than 5% on any given day. The most that I will ever lose in one day is 5%. That's the most that I will ever lose. And if I lose 5% in a day, then I'm done trading for the day. Right? I'm out the markets. I'm chilling. All right? I'm on the sidelines. I'm going to let the markets do what they do, and I'm going to come back tomorrow, right, with a fresher mind and hopefully fresher ideas. Right? But that's one thing. Okay. Another thing that you can do to really manage your money is to start to leverage different trading accounts. Like actually create separate trading accounts for whatever habits that you might have. Right? Like if you know that you're being greedy, or if you're traditionally a greedy trader, then have a high risk trading account. Have a medium risk trading account. Have a low risk trading account. Right? And literally just be disciplined in following the risk for those type of trade accounts. That's another way to manage your money, right? Separate it, especially if you're working on a budget, right? If you have $1,000, then separate that money into 3 separate accounts: low risk, medium risk, high risk, right? Or low risk, low risk, low risk, or low risk, mid risk, high risk, right? However you want to structure it. But start to manage your money in a way to where if something does go wrong, at least you have a backup plan. At least you have something to help you out. At least you're not now stuck without being able to fund your account. All right, you're going to have to learn how to manage your money, guys, if you really want to see real results in trading. All right, let's see. I'm from Jamaica. What's going on? Shout out to you, Kai. I appreciate you. So you think the dollar is going up short term? I think the dollar for right now, let me show you guys again. I think the dollar for right now, we're still going to go down short term. Again, this is my blueprint here, guys, for the dollar. I think we're going to go lower, but then I believe we're going to eventually rebound and continue going higher, right? So this is literally, and I'm on the daily time frame looking at the dollar index. Okay, so this is what I want to see. I short term want to see more continuations lower, but then I do expect this thing to eventually rebound and continue its dominance that has been showing. So that is my opinion for the dollar as a whole. Let's see. This seems like ideal if you got a 9-to-5, right? Not, you don't need a 9-to-5. You do got to have some type of capital though, right? It's not necessarily about having a 9-to-5. It's all, you definitely need some capital though. You need money to be a trader, right? Like that's, you can't trade without no money. You could do demo account all day long, but if you're here to make money and profit and pay your bills and live a lifestyle that you want to live off of this, and yeah, you're gonna have to have access to capital, so that you can fund your account with, for sure. All right, for sure. All right, so again, guys, that's pretty much what we're looking at. Let's see what else we got here. Again, GJ is at a very interesting level. It's tough for me with GJ because I do think that we are eventually going to rebound. It's just a matter of when, right? Because now we are at a very interesting level of structure right now. But I think that there's also a chance for price to really go even lower, in my opinion, right? Lower, and then from there I do, because this is just me, right? Again, these are just my thoughts and my opinions, guys, right? But I still think that we're going to see more upside here for a lot of these yen pairs. All right, I really do. It's just a matter of seeing where it wants to bounce off at, right? Are we going to react from this 163 level we're currently testing and then continue higher? Or are we going to go down to around 162, 161.5? And then from there, see if those levels hold to continue going higher. All right, so that's definitely something that I'm gonna be keeping my eyes on, because GJ is definitely one of my favorite pairs to trade. It's just, I mean, it's just a pound pair. You know, a lot of these pound pairs, guys, are super volatile, especially for currency pairs as a whole. Right, so yeah, this doesn't look bad though. Seeing what happens is gonna be key. Let's see, facts, but that's a great way to put things. 100%. I was in a buy for USD CAD, keeping stops at break even, keeping in mind that the Dixie will soon come back down for a retest to then continue up. Yeah, that's my opinion, right, too. Like, I think we're gonna see the continuously seeing selling pressure for the dollar, but then eventually it's gonna rebound and continue higher. Let's see, thanks, bro. You help me every time I make a live stream. Shout out to you, Trucker. I appreciate you, Trucker 4Gs. Thank you for rocking with me, man. Let's see, thoughts on USD Swiss for sure, Kyle. Let's go take a look at this. All right, let's see what we got here, right? Let's see, looking at the 0.95 level. All right, so USD Swiss is at a very interesting level of structure already that we're pretty much playing off of right now. And, I mean, yeah, there is a chance for price to rebound because, I mean, the 0.95 level isn't too far. It's literally right down here at the end of this little wick right here, right? And, yeah, price could realistically bounce off of this level and then go ahead and start making its way higher. Right, but price can also, because we have been experiencing some bearishness, short-term bearishness for the dollar, we could also see the market bring us a little bit lower before we go ahead and rebound much higher. If I'm going to be betting on something, all right, if I were to bet on what USD Swiss was going to do, I would bet that it's probably going to end up running these lows. In my opinion, right? In my opinion, I think that we might actually end up continuing to run these lows. And if that happens, then I'm very much interested in looking for some buys somewhere down here at around the 0.93 level, right? 0.93 dollar Swiss. That would be the area that I would be very interested in looking for some longs from, right? So that's just my opinion. We continue running through this level of support right here, and then I'll be looking to buy down here at this demand zone all day long. All right, so that's going to be my outlook here for USD Swiss. Let's go lower time frame. So if that's the case, what can we look for? Abel, I get it, bro. If we are going to continue going bearish, where do we take a trade from? All right, do we just sell from right here? Probably not. All right, you don't want to sell from right there. We're going to have to wait for a pullback. And then after that pullback, try to go ahead and get involved. Okay, so a pullback back up to, say, this level right here might not be a bad play. Okay, so a pullback back up to 0.96 could be a good opportunity to go ahead and look to short USD Swiss. Okay, something like this. All right, and go ahead and target this thing all the way back down to the downside, right? So, you know, that's just a little outlook here for USD Swiss, guys, and how I would approach it if I was going to actually trade it. All right, let's see. I feel like the Dixie really wants to come to retest that 105, 128. I agree. Shoot. I agree. Let's see. I feel like I don't see some of the moves until it's in hindsight. Yeah, I mean, everybody goes through that, TW. Right? That's just one of the things that every single trader has to experience, right? That's why the biggest thing that's going to help you is experience, right? Actually putting in the chart time, actually sitting in front of these charts for hours and hours and hours and studying video after video after recording, because you do have to just gain that experience, right? You know, because once you gain that experience of looking at the same exact setup over and over and over again, it's eventually going to, you know, get to a point where it just is there, right? And it's making so much sense and it's so clear as day for you. You know, so just continue working at it. You know, again, the only thing you could do is just continue building that experience. Let's see. Thanks, Abel. Learning a lot from you. Shout out to you, Sauce, and I appreciate you. All right, I appreciate you. Let's see. What do you think in Euro NZD? Yeah, let's go take a look at Euro NZD. See what we got over here. All right, so Euro NZD for the most part, what have we been doing? Well, this is an absolutely disgusting looking pair. Right, disgusting, right? But as of right now, guys, I'm probably going to be expecting still more continuations to the downside, in my opinion, short term. Yeah, I'll just more so continue looking for more bearish moves for this one, all right? Because this is just disgusting for one, all right? But based on what we're seeing, I would more so be looking to target this level of structure down here, but I do think we still have more downside continuations for Euro NZD, right, as a whole. Okay, I still think we have more downside, so I would be looking for continuations to the downside. It's just a matter of waiting for a pullback and then continuing to ride it out after the pullback. I don't want to sell it right here, right? Because if we're looking at this range, the swing high to the swing low, okay, remember, keep this in mind, family. All right, do not forget about premium versus discounted price points. Right, so we have swing high to swing low. If we wanted to sell Euro NZD, do we want to sell it at a discount, which is where it's at, or should we want to sell it at a premium? Answer this in the chat. Remember, anything above the 50 on the Fibonacci tool, anything above is going to be premium pricing. Anything below is going to be discounted pricing, right? So premium is above this black line, discounted is below it. If you were to sell something, are you going to sell it at a discount, or are you going to try to sell it at a premium to make money? Yeah, we want to sell it at a premium, right? So this is why I have no interest in selling Euro NZD from where it's currently at. I need to see price pull back up first, and then once we're in premium price levels, then we can go ahead and take advantage of this trade. So for me, I would be very interested in looking to short probably at around this 1.625 level. Right, 1.625 is where I would really be interested in looking for some shorting opportunities here for Euro NZD. Right, but I hope you guys get what I mean by, you know, discounted versus premium price points. Very, very important thing to understand. But yeah, you know, we need to see this thing pull up a little bit more, and then from there go ahead and look for some shorts. All right, so let's look at AUD USD. We already looked at, but I'll show you guys again. And this is what I'm looking at for AUD USD. You know, I really like the 0.705 level. If we can react off of there, then I'll be going bearish all day long. I'll be going bearish all freaking day long, right? Just because I think we are still going to see more downside here. But that's overall, guys, what I'm looking at for AUD USD as well. Okay. Now, just throwing this out there once again, right? Like I've been saying, it's the thing that I've been promoting like crazy. All right, just got to put this out there because it is approaching very closely. Spots are very, very close to filling out. I think there's only maybe like 10 to 15 spots available left. All right. But we do have, guys, our 5-day ProTrader Bootcamp coming up August 15th through the 19th. Right. Classes start at 7 p.m. Eastern each day. All right. I know that I've been getting a lot of emails about this. Abel, what time do they start? They start at 7 p.m. Eastern every single day, guys. Now, one thing to keep in mind as well, okay, each day will be recorded, right? So if you actually participate in the boot camp and you can't attend 1 day or 2 days, or you can't even attend all 5, you're still going to get access to all of the material that we utilize, so you can always go ahead and pretty much watch it whenever you do get the time to do it. But this is going to be major, guys, right? 5-day ProTrader Bootcamp. All right, I guarantee you that this boot camp is going to change the game for you. It's going to bring a lot of insight to your trading. It's going to really bring a lot of clarity. It's going to also show you exactly what it takes to really become a professional in this. Right? No rah. No. This is like real, actual, true value structured in a way that you will see a change in your trading. You will have a much better understanding of what the hell is actually going on. Guaranteed. After the boot camp. So again, if you're serious about your trading, family, right, then make sure to go ahead and secure your spot for the boot camp ASAP. If you have any questions, comments, or concerns about the boot camp, right, you can either send me a message directly on Instagram. Instagram is right below this picture right here, my face, right, or you can go right to the actual the link in the description. The first link in the description of this video is going to be about the boot camp. you want to fill out that form, at the bottom of the form there's going to be an email that you can also reach out to with any questions, comments, or concerns that you may have. But guys, this is where we need to be. August 15th through the 19th, every single one of us needs to be on this call. It will be game changer. 5 days straight of straight value, real sauce, authentic value, authentic sauce that is going to change the game for anybody that's a part of it. Guaranteed. Guaranteed. Okay? So I look forward to seeing all you guys there. Do not miss it. I promise you it's going to be worth every single penny that you actually pay for it. But besides that, family, I do appreciate all you guys so much, right? It is going to be a shorter actual call for today because there's really not that much, right, that we could talk about, right? We went over the fundamentals. We looked at the opportunities. Now it's just all about the execution at the end of the day, right? But I do appreciate every single one of you guys for rocking with me tonight as usual. You know, it definitely means a lot. I look forward to continue providing you guys with massive, massive value. I will be back on Sunday hosting my weekly overview, so look forward to that video as well. And I'm actually going to be doing, guys, on Sundays, right? On Sundays, for now on, starting this Sunday, every single weekly overview video that I do host is going to be strictly for my inner circle. And then I'm going to upload the recording on YouTube for everybody else, right? So if you want to be able to access and be a part of my actual live weekly analysis, my weekly overviews, and actually catch me do it in real time, where you're able to ask questions, get your questions answered in real time on a Zoom, right? Then make sure to be a part of the inner circle, right? Join the inner circle, guys, by selecting a membership here on YouTube. Once you do that, let me know and I'll go ahead and get you added into our private community, guys. But yeah, every single Sunday for now on, right, I'm going to be doing that call live with you guys in my inner circle, probably around maybe 12 p.m. noon time. And then I'm going to drop the recording of that later on today. So you guys will all have access to the video first before anybody else, right? So I appreciate you guys. I love y'all. Thank you guys for rocking with me. And I will see you guys in the next video. Love you guys. Appreciate y'all. Let's get it.
NAX.